Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris Rapeseed, Winnipeg Canola, and Malaysian palm oil.
Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, Paris Rapeseed. Since the low in mid-March with a V-bottom that spiked in a hammer pattern, we've seen prices for the most part very gradually try to move high in what I initially thought might be a possible ascending triangle pattern, but which became an ascending wedge pattern. The lower trend line for both is the bright red mid-March to date, breached a number of times and repaired and breached again 2 weeks ago, currently at 487. Whilst the upper trend line is the purple neckline extension, currently at 500, which has also been breached and repaired. And that's to the April to August 2024 head and shoulders top. Now, we've had attempts higher and some looked good enough for me to consider targets above, which I have today retired as prices chose instead to head lower, and last week pierced, though not closed below, the dark blue February 24 today downtrend. It's not even dark blue at the moment, but anyway, the dark blue today, February 24 today, downtrend. And that's currently at 469 a quarter. What became obvious since the breach is that what was once support is now again resistance. Specifically, the very close, bright green, very shallow neckline extension, currently 481.5, of the August-September 2024 head and shoulders top. The mauve medium moving average, currently 482 3/4, and I suppose the green short medium moving average, currently 485. Though this is now capping the market over the last 3 weeks. However, we also have something below, as I said last week, and I quote, further support below is now down at the congestion zone, which we have now entered between the bright green neckline extension above, which one I mentioned, and the 50% Fibonacci of the May 23 to January 25 move at 467 1/4. Quite a wide support zone, but it's still there. End of quote. So there's a lot of pressure both above and below. All this prompted me 4 weeks ago to look at downside targets. Thus, a primary target X2 is down at 462 underneath the 50% Fibonacci line of the May 23 to January 25 move at 467 1/4, and just above the late April low at 461. We also have a secondary harder to reach, much harder to reach target X3 down at 433.5, a target that seems very out of reach right now. This leads me to my final point, and is to wonder whether the whole May today action might be a possible very scrappy head and shoulders top pattern. I'm not certain on this, but I've chosen to draw a bright pink neckline. It's currently at 466 for this pattern. So far we have only had a brief foray lower, and I'm wondering if this is a genuine pattern. So for now I will just keep an eye on it and see how it develops. Winnipeg Canola. The key recent pattern is the bright red late June to date bear channel, currently 637.90 to 692.90, but it is coming down to some significant and possibly hardy supports. The market last week made a spike low, but not seen since early April, the low of that. However, it has as yet not been able to sustain the move down, pulling back up last week and today, just over the 38.2% Fibonacci line of the July 23 to September 24 move at 665.70. The reason for this is multifold, and all the supports are actually quite heavy hitters. They are the flatlining gold long moving average, currently at 659.40, the 50% Fibonacci line for the whole of 2025 so far at 655.60, and perhaps the least of these, the June 21 low at 655.90. Now there is another pattern that might be developing, and it's something I noted a few weeks ago, but I've not been able to really nail it down. So look at the whole mid-April today action as a possible complex head and shoulders pattern, a really ragged one as well. If anything, I would look now for at the 38.2% Fibonacci line at 665.70 as a proxy for a possible neckline until I can accurately draw one. as we have as yet not let go of this Fibonacci line. I'm not looking at targets below. I'm still open to looking at this action as a possible head and shoulders continuation pattern back up. So, though it would be one of the biggest ones of that type that I've ever seen if it was true. So for now, watch the action within the bright red bear channel, but keep an eye in case we have a very complex head and shoulders top as well. Bursa Malaysia Crude Palm Oil. To start with, as I've done for a number of weeks now, I'd like to look at the wide congestion area that was overhead between 44.08 to 45.59, but which this week has been we have tried pushing up through, though admittedly with limited success. When I first started looking at this area some while ago, it was a bit far away, but it's been getting closer week by week. It was originally actually support, but is now resistance, and not only that, but longer term resistance. The overall move higher here all started with the drop down and subsequent build up from the testing and breaching of the interesting neckline extension below, currently at 38.65, of the small late May to April 2024 reverse head and shoulders bottom. I said 15 weeks ago about this neckline, I quote, "This is one to watch on the downside as it is the core of a large April to September 24 congestion zone stretching from roughly 3750 to 4100, end of quote. Importantly, it caused prices to start to move higher with what turned out to be, as I said 9 weeks ago, and I quote, a possible, if imperfect, bright red ascending triangle pattern formed over May to date. It's a small pattern and I could regard the action as an attempted false break on the downside that so far has failed, end of quote. However, I gave both primary and secondary targets topside and these duly came about soon after. In that time, the market started to form what we can see as the core recent bullish pattern. An early May 2 date bull channel, currently 42.78 to 45.35. This week we've seen an early attempt higher out of the bull channel, but so far this has failed and the main pattern still remains. Indeed, last week the gold long moving average, currently at 44.03, capped prices, but this week we started with a gapping move higher over this gold long moving average, and it now can see it as a nascent support, but with one caveat, as above it all the way from the gold long moving average up to the dark blue neckline extension, which is highlighted on my daily chart, the big old September 2015 to November 2017 head and shoulders top, is various layered congestions, though how good they are given past history may be up for debate. There's one other feature which I would like to discuss, and this came about because it was at the end of June speaking about it in a presentation at the Biofuels International Conference and Expo in Brussels, Belgium. It was and is to watch out for a key level from now until the end of this year, and that level is 35.99, so quite a way below the market, but still important. You see, if prices push down below 35.99 before the end of the year, this year, which even now is possible, then we would have set up the conditions here in palm oil to make that rarest of patterns an annual key reversal, with all the implications such a huge long-term pattern may bring. Please watch out for this, as it is important, and I will bring to you more detail should we get down below there, even though I know we are today many hundreds of ringgits above it. Just please bear it in mind as we still have many months of this year to go.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.